Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today's the 5th of February 2020. So, yep, welcome everyone. Welcome to this Wednesday's morning session. We're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute any invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, guys, as I understood, we have no sound here, so let me recap, guys, and I do apologize for the loss of the sound here. So let me thank you for the comments, guys, and like I said, let me try to recap very quickly on this, what I was talking about. So basically, let me start from the beginning here, guys, and looking at the picture here, the technical picture on the DAX. Now, okay, this is a little bit okay, not very great, so I do apologize for that, guys. So let me start from the beginning here. I do understand that we ran a little bit already through all this, but nevertheless, I mean, we didn't have any sound on. And quickly mentioning the DAX here, so basically the DAX had a nice push back to the upside. Now with the right, let me just, yeah, so basically with the DAX here, basically the fact that we had a nice push to the upside here, traveling back above the 200 EMA on the 4-hour chart, you can see that yes, the nice push in the equity markets yesterday did help the DAX as well. And but from the technical side, what we need here is a nice push back above the 13,400 level before considering the upside again. Now again, guys, this is for now. It's, yes, it is kind of showing good signs. The only problem with the whole this situation with the coronavirus is the fact that, yes, on one hand we do get some positive news coming out saying that the death toll is kind of contained, or I should say the virus is contained, but the death toll is still rising. So that's why if we see another spur in the death toll, then yep, we could see a nice strong reversal back to the downside here on the in the equity markets. And for now we're keeping this one. Yes, it's a nice sign that we had a nice push higher here, but from the technical side you can see that we're still below this medium-term upside support line. So we need to see a nice good push back above the 13,400 level before we could consider at least a move back here towards these highs that we saw here in January. In terms of the downside, a drop back below the 200 EMA and a drop below the 13,120 zone could in a way do the trick here for more sellers. So keep your eyes on these two areas. Let me just quickly drag this highlighted level here, and yep, we'll see how this is going to play out. Now jumping into Brent oil. Now Brent continues to slide in a way, continues to trade below this short-term tentative downside resistance line taken from the high of the 7th of January. Of course, given that it already had a decent run here to the downside, we need to see a nice push back to the upside here, maybe a bit of correction, and if this downside line holds, we could see another nice round of selling, potentially driving this one lower towards the levels which we last saw in 2018. So basically the lowest point of 2018 is around the 50.29 zone, or in a way you could round it up towards the 30, and then yep, one of the levels could be an interesting one to watch. Of course, the first one to watch will be the low of the 28th of December near the 52.07 mark. This could be a nice target, but again, guys, for now, given that we had already a decent slide to the downside, let's see if this actually can retrace a little bit higher, if it can test the downside line, and this is where it could become interesting, because if it struggles to push above this downside line again, then yep, another round of selling could be possible. For those who are more on the cautious side, you could just wait for a drop below the 53.68 zone before considering a further decline. And yep, for now, guys, for now, like I said, keep your eyes on this level here, on the low of yesterday near the 53.68. A nice good break below this would confirm a forthcoming lower low, and yep, further declines could be possible. Now in terms of the upside, we will only consider the upside if we get a break above this downside line, or even ideally a nice close above this downside line. So in a way, any move higher right now could just be seen as a temporary correction, so that's why the upside is slightly off the table, and we'll focus more on the downside on this one. AUDCHF. Now we did get some information here from Australia this morning. We did get some services PMI figures, maybe not that major, but nevertheless kind of placed the number back into expansionary territory. So came out better than the forecast, and yep, we are seeing, of course, in general, we are seeing a nice push higher here since we've tested the 0.6423 level back on the 31st of January, and then this February started off nicely. The only problem here is, of course, this downside resistance line taken from the high of the 1st of January. So in a way, guys, in a way, we could consider a bit more upside here, but we'll be very careful and very cautious near this downside line, because if it struggles again to push above it, we could see another round of selling. The only problem here, little problem, is that we will not target the low of January yet. First, we would like to see how it's going to perform around the 0.6482 zone, which is the high of the 3rd of February, and also marked by an intraday swing low of the 4th of February. So this area here could present itself with a nice opportunity here for the buyers. But again, of course, we'll be very careful here, and if it breaks, yes, we will aim for the lowest point of January, but if it gets a hold up around here, this is where we will be a little bit on the cautious side. So in terms of the upside here, but if suddenly, let's say, this line gets broken earlier and the pair travels above the 0.66 mark, then, well, I mean, this is where we will aim for the upside. Again, the upside might get limited in the end by this medium-term downside resistance line taken from the high of the 7th of November, but of course we'll take that for now. This still is a decent move, so yep, we'll take it as a nice a kind of opportunity for the bulls here, and yep, could be a nice push higher, but only if we get initially above a break above this downside line and a push above the 0.66 mark. USDJPY, now again, something that if you were watching the video, I mean, you probably saw me drawing all this, and but there was no sound, but again, apologies for that. So quick recap of what I was saying. Basically, we had a nice push higher, and yesterday in my trader's tea time, I was talking about this barrier here, the 109.27 zone, which acted as a fantastic area of resistance initially, but it quickly got broken. And what I was saying, that if that gets broken, we could see a nice push to the upside. You can see that the pair got a hold up near the 109.55 zone. This is now we are seeing now a nice normal natural retracement, which is quite okay. The area where we will still be keeping an eye on will be around the 109.27 zone, and this is where the 23.6% retracement on the Fibonacci comes in. So basically, this is a very nice area of potential support. Of course, if it holds, then yep, we could see a nice push to the upside again. Don't get me wrong, we do have some interesting data from US coming out today. So we have the ADP figures, something to keep an eye on. Then we have the ISM non-manufacturing figures, non-manufacturing PMI figures from the US as well. So in a way, if even, let's say, this the pair drops back below this, now we will still consider a possibility here, maybe, let's say, seeing a false breakout, and then let's say if the body of the 4-hour candle climbs back above the 200 EMA, now this is where it could become very interesting for the buyers again, and we could see this one traveling to the upside. Initially, we'll target the 109.65 area, and then yep, we'll then start considering higher levels. Of course, the psychological 110 territory could be a possibility, but for now, keep your eyes on this one, guys. For now, keep your eyes on all this territory right here around the 109.27, or maybe a little bit lower. Let's say even, let's put it to the 109.20. If it holds, this could be a nice area for the bulls to step in again. GBPUSD, very quickly on this one before I run out of time. GBPUSD, what I was talking earlier was that, of course, overall we are still trading above this medium-term upside support line taken from the low of the 3rd of September. But as you can see, yesterday the pair tested this line again, rebounded very quickly, and pushed to the upside. That said, it still remained below all of its EMAs here on the 4-hour chart. And to be honest, the fact that the US dollar dollar is picking up right now, and the pound is not really on the stronger side. In a way, there could be a chance for this one to drift lower, but we will consider the downside only if we get a drop below, not only below this upside line, but also a drop below the 1.2950 territory. So this would confirm a forthcoming lower low, and yep, we could start aiming for the 1.2903 zone, which is the low of the 23rd of December, or even going further down south. But again, until we see that break here, we cannot really talk about the downside yet. With the upside for us, in order to get a little bit more comfortable, we will wait for a push above the 1.3110 zone before examining, potentially considering higher areas. So yep, guys, for now, keep your eyes on this one, and let's see how this is going to play out. But again, be very careful around this territory here. Of course, also be very careful with false breakouts. So that's why we would ideally prefer to see a 4-hour candle close below the 1.2950 zone before considering the downside. Euro USD. So I talked about this one earlier, and basically what I've removed here was the 1.1040 zone. So I talked about this one yesterday in my videos, and but as you can see, the pair kind of in a way violated this 1.1040 zone, so it didn't really like it very much, and so I've removed that from the chart. And what I'm going to be focusing now on is going to be the 1.1015 territory, which is the low, the 31st of January. So if we do get a drop below that, in a way it increases the chances of a further drift lower. Again, all this kind of activity here, all this zone is not really an ideal one for us. Even with the upside, for example, we still would like to see a push above the 1.1095 zone, 96 area, somewhere around here, because this way the pair would confirm a forthcoming higher high, and yes, we could aim for the upside. And until then, it's really difficult to talk about the upside, but even it's difficult to talk about the downside, because in a way we would like to see a nice good deeper move lower here, and ideally drop below the 1.1015 zone before kind of considering further declines. And of course the psychological 110 zone could come into play nicely. Then we could aim for the low here of the 29th of January, or in other words the lowest point of January, near the 1.0990, or we could target the lowest point of November near the 1.0980. But again, guys, it is a tricky one right now, and probably let's be on the safe side and wait for a drop below the 1.1015 before considering these areas here. So guys, okay, I hope you found it useful. I do apologize for having no sound initially. Thank you very much for the comment, just kind of notifying me on that. But yeah, I didn't see it too early. But anyway, guys, I really appreciate your patience. I really appreciate you being sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, 14:15 GMT. For now, guys, I hope you have a beautiful trading day, and I'll see you later. Thank you very much, and bye-bye.